Okay, so recording has
Oh,
started.
all right.
So
Thank
once
you.
again, this is the ASFPM Insurance Committee call, and your presenter is Bruce Bender.
Great. And again, thank you so much, Becca, for setting this up, and Atkins for the support. As mentioned, the update will go over the issues on the new elevation certificate. Seal Strauss, our chair of ASFPM, is that the proper title? You'll tell us, Seal, your title. Will give us an update on ASFPM's participation of ag structures in the floodplain. They are interested in trying to do some things with flood zones and flood insurance, which ASFPM may not be totally on board, but I thought it'd be great for people to be aware of and might be able to provide some information to SEAL and ASFPM on that. Chat has been very busy as different organizations are starting to line up and talk about reauthorization. The NFIP, which expires at the end of September next year. Also, they are running a pilot. FEMA is a pilot reinsurance program and have put out requests for quotes for an actual reinsurance program to be initiated early next year. So Chad will give us an update on that. FEMA or FIMA just held what's called a sprint, where they kind of put everybody in a room for a couple weeks and try to figure out how best to improve, enhance, or fix certain issues around the NFIP. They had one, an increased cost of compliance. Our very own Jennifer Grabatzi was invited to it, so she'll give us her perspective, plus what's going on there in Louisiana with her challenges and updates. Pat also, I believe, listened in on the call and will give us some updates there. Aren't too many changes that just happened in October or coming up in early next year, which is really unusual. So that'll be a quick one. And then we'll finish up, talk about any new business or any issues, challenges that people would like to bring up in the world of insurance. John, was there anything else that you want to mention before we jump into ECs?
No, you got it.
All right, great. So for those who are online, a lot of small print here, and we'll go ahead and get this up on the Insurance Committee website. But it's a listing of, probably about 10 different items that we have collected over the past couple months of some issues around elevation certificates. And I'll just highlight a few for those who are on the phone. And if you think of others, we'd love to hear about them, but soon. And we find out in some cases it's more regional or local or state issue, where one state may require something, but other states do not. So it's so much locale specific. For example, Section A89, they don't allow alpha characters, and it'd be nice to have here and in other places the ability to put NA when there is none. So that's one aspect. B6, B7, you paste a date into the field. It doesn't always connect to the calendar pull down, so it's just a minor thing, but maybe they could fix that. For those who are in the coastal areas in B12, if you accidentally check, or maybe you don't, and you accidentally check the COBRA or OPA box, you can't uncheck them. They only switch back and forth. So again, that makes the elevation certificate incorrect, and you have to kick out and start all over again. Here's the big one that we've asked FEMA to fix, and at the FIPNIC meeting in October, they said they would address this and get back to us, and they have yet to get back to us. FIPNIC is the Flood Insurance Producers National Committee. It's the meeting of different agent associations that meet with FEMA 3 times a year to review issues, challenges, and be a feedback for FEMA on things that they're planning. So this was presented to them a while back. They said they'd get back to us, and that is when you put in Section C2, A through H, and in Section E, if you put in a number with a leading zero like 3.06, the form automatically drops the 0 and makes it 3.6, which is a big difference. To avoid all that, the thought is let's not make it a numeric box, but make it an alpha, and then that would allow someone to put in NA, not applicable, if that was needed there. So we have yet to hear back from FEMA on that one. For those who put on seals and need the expiration date, it doesn't allow that, and some states do require that the expiration date of the engineer's seal or surveyor seal is put there. Photos, once they're in, you can't take them out. You can only replace them with a new one. So if you put in the wrong photo and you don't have any others, you can't get rid of it. Some people have reported that the copy-paste doesn't always work. So we haven't been able to identify a specific pattern, but that seems to be an issue. Some have had issues printing forms. It could be related to the version of Adobe that the people have. And we have two recommendations for future ones, that they do put in NA boxes in certain sections. So the agent and underwriter know that it doesn't apply. And in future iterations, also adding a data field in 8A and 8.9D after yes and no that gives the total rated area of flood openings per X square feet. That seems to be missing and would be helpful to make sure there's no misrating from data that is or is not area. So those are about a dozen or so the changes we've picked up and will be submitting to them in the next week or so in a formal letter to Paul Wong over at FEMA or FIMA. Anybody else have a comment or so? And I don't know, Becca, how we can do that to raise their hands, or I don't know if your system allows that.
Nope, we don't have a raise your hand feature, but you can just speak up. We have the ability to unmute, and also there is a chat feature as well. So if you wanted to type IMs in to the conversation, you just click on the speech cloud in the bottom left-hand corner, and it'll open up an IM window. So we can use that as well.
Oh, okay, that'd be
Scott
perfect.
In Key West.
Go ahead.
Scott in Key West. Yeah, when they moved the field to page, or the seal area to page 2 along with the signature, it allows for substitutions of the first page.
I believe that's an older version of the form.
Yeah, they moved that seal back to page 1.
They moved the seal back to page 1?
I believe so, because of that concern was raised.
Right. That was on page 1 of the previous form, because originally years ago it was on page 2, and that's why they moved it to page 1. But on the new form we're using, it's now on page 2.
Right.
Hey, Bruce, this is Dale. It's actually, they moved, in the latest version of the form, they moved the seal, section C and section D all to page 2. So it sounds like you're using an older version of the new form in Key West.
Oh, okay.
If you download the latest version, it's been addressed.
Great. Any other questions or comments? Or again, we'll put this up on the web on our insurance committee page, and you guys can look at it in more detail. But speaking of elevation certificates, John, would you mind? I know you've got to be running, so it's not really new business. Could you give us an update on your surveyor program that you guys have in North Carolina and other states' interests?
Yeah, Bruce. Before we get off on the EC, I get a lot of questions about is it going to be a MS Word version? Do you know if your discussions if they're looking to come out with a Word version?
When they spoke to us at FITNIC, they indicated that this was the only version they were going to have. And part of the issues they've been having is this fillable form. I don't know if it made sense or not, but they said really they had no one who had experience in using the software there. So hence the slowness in getting updated. But this seems to be the only form they'll be doing this time.
Okay. All right. Yeah, I've got to run here just a little bit, but appreciate the chance to talk a little bit about the certified floodplain surveyors. We've mentioned it on previous conference calls about the North Carolina CFS program. So it's a pilot program that was initiated by FEMA, North Carolina, the National Society of Professional Surveyors, North Carolina Society of Surveyors, but it's currently still a pilot program. We have 220 certified floodplain surveyors. It's similar to the CFM, but the exam's a little more technical. The benefit of a CFS is they will fast track the letter map amendments, letter map revisions based on fill for a 5-day turnaround as opposed to the 60-day typical review timeline. We've met with Tennessee, and Amy Miller, who's a Tennessee state coordinator, came to North Carolina last month and went through the training. We have 2 Tennessee surveyors that are CFSs that came to North Carolina for the training, but Amy we're working with Amy to get the program into Tennessee. So hopefully this next year, that's her goal, is to have a CFS program in Tennessee as well. So there'll be 2 states with the certified floodplain surveyors program. And we're excited about that. It gives us good elevation certificates. Permitting officials are complimentary of the program and the ECs that they receive. So I think it's a win-win all the way around to have the surveyors trained in elevation certificates and the map revision process. So we're hoping to get other states engaged, and would love to work with other states to try to get initiated outside North Carolina and Tennessee.
Great. Anybody have any questions for John on North Carolina or the Tennessee effort?
This is Bill Neckman from New York. Can you hear me?
Yes.
Yeah.
Okay. Wasn't sure if I was on system mute or not. I know that there was chatter on this within the ASFPM board and the CFM folks. I think there'd be a lot of interest in a lot of states through either the state coordinating office or the state chapters in trying to work on this in their own states. So I know we'd have interest up here. So the more we can learn from your experience, and the better.
That's great. As we work through with Tennessee, certainly, we can, work with other states. They don't have to be in Region 4. I did request some CAP funding, Bill, just to help through the process, and the region has, we agreed on it back in September to help some of the Region 4 states to become CFS states. But we'll certainly work with any other state outside Region 4 to get this program going.
I think it's great if it helps, improve the quality of elevation certificates, as well as the people talking about flood insurance and flood risk. That the better, absolutely. Okay, well, let's move on to the next topic, and that brings up Seal Strauss, who's been sitting on behalf of ASFPM, the California task force about ag structures in the floodplain. They have some really deep floodplains and issues when levees are decertified and mitigation is needed, or they become substantially damaged. Presents a unique challenge, and with some outdated FEMA regs or guidelines. So, Seal, are you unmuted?
I believe I am. Can you hear me?
Yeah, I can indeed. I will mute myself.
Great.
Thanks.
So I was just going to give a little bit of an overview of the effort, and I see some California callers here, so there might be people who know more about the process of this effort. But my understanding is that this has been going on for the better part of a year. I've been sitting in on quite a few of the meetings over the phone, and I did have a chance to go and participate in a panel at the Floodplain Managers Association, or the FMA, whatever that stands for, I'm not sure. But their conference there in California back in September. And the last big meeting for the task force was on December 12th. And that was a pretty long meeting where they were going through all the recommendations. For ASFPM, I did submit comments in time for just before that meeting started, and we've had a couple of follow-ups. I'm going to just try and go through and highlight a few of the main areas and where we have agreement and where we've got some conflicting viewpoints between ASFPM and some other members of the task force. Overall, we all agree that agriculture is a good use for the floodplains. And there in Central California, it's certainly a big concern, as Bruce was mentioning. But it also, as I've brought in input from other ASFPM folks from around the country, agriculture is a huge issue in floodplains all over the country. And quite a few of the recommendations had to do with the disconnects between the values of egg structure and what the real losses would be when you've got a wet flood-proof structure, and that the premiums are much higher than the kinds of losses you'd expect to have. And we all, both ASFPM and most of the task force members, agree that we'd like to see FEMA working on those issues and doing a better evaluation of what the rates really should be for some of the different types of agricultural structures, for flood-proof structures. FEMA is in the process of updating Technical Bulletin 7, which those of you who work with egg structures probably are familiar with. If you're not familiar with it, you might want to take a look at Technical Bulletin 7. That gets into situations where, from a regulatory standpoint, you could be giving variances by wet flood-proofing the egg structures. So the other area that was a disconnect that got brought up was the $250 surcharge, and we had one of our members discussing how someone with several small egg buildings that were not worth a whole lot. They had the premiums, plus they had the $250 surcharges on those egg structures. So that's an area that I'd say that we all agreed that there was some need for having the premiums reflect what the real risks are for those structures and the costs of insuring them. The other big area that was discussed was the concept of using Zone D instead of Zone A's in the levied areas. And that's an area where the ASFPM, we were strongly opposed to that concept. And for many reasons, but partly because when you have Zone D's, the Zone D is intended for where you don't have the data, where you don't know where the risk is. And when you use Zone Ds, you don't have the mandatory purchase requirement, and yet the cost for the flood insurance is quite costly. It's about the same as A zones, so people are discouraged that might otherwise buy policies in those zones. So that's an area where we had strong feelings from the people I got input from with ASFPM about the use of Zone Ds. Although the task force, everybody did agree that no matter what, you'd be having higher standards for the residential properties, but there was still concern with the concept of the Zone D, using the Zone Ds in those egg areas. The other big area that had some discussion was that there are some opportunities to do relief cuts in some of the levied areas in California, and that was an area where they were proposing to be able to have the flood elevations not be as high based on using these relief cuts and having the flood elevations be based on on emergency relief cuts. And ASFPM, those that I got input from, and our comment to the task force was that we were not in support of using relief cuts, particularly where it involves emergency responses. If you had an actual structure there and a plan that went with it and it was approved, that's a different matter. But the emergency response approach is definitely a concern to us. So I don't know if Chad or if anybody else who was involved in that wants to chime in with any additional comments.
I think you covered it pretty well, Seal.
Okay. So, and I'm not sure when the final report's coming out. I know that they wanted the input, it was a couple weeks ago here that they wanted final comments on that report, and I'm sure it's going to take the folks working on that final, actually they're calling it a technical guidance memo, not, it's not a report. They were getting into the terminology there, but I would guess that final technical memo will be out fairly soon.
Yeah, I think their funding ends at the end of the year, so they are looking to get that out, this week or next. I happen to hear from Rod on one who's heading this up for them, Rodney Mayer, and he indicated that he wanted something back from me on the next day or two so they can get it in before it closes. Or they close it all up and get it out. So I think we'd be looking for that at the beginning of the year.
Okay.
On that. So thanks. So
sure.
Let me throw it out.
Just seeing that I was incorrect on the date of that memo, and the last big meeting was the 2nd, not the 12th.
Right. They had to push it back. So let me open it out to the committee members to see if anybody has any comments or thoughts around or issues that they have with egg structures that's particularly important, or if not, if you want to send us an email or put it in the chat, that's fine as well. But before I thought I'd move on, I'd see if anybody has any comments to what Seal had to say. Or do people have issues? And maybe this isn't a big deal. Well,
this is Bill in New York. Yeah, I think it is a big deal, and I think we're hearing Seal's report. I think you're on the right path. Thinking about some of the ag structures, I know in California they're concerned a lot about migrant worker housing and that sort of thing. But in a lot of other places in the country, including California, there are things like large CAFO barns, with hundreds and hundreds of heads of animals, manure holding facilities, things like that are absolute disasters when floods happen. So I think while I think we can support kind of easing the flood insurance approach and the NFIP approach to some of this, we also have to be very cognizant of the real threats that happen when ag facilities get flooded.
Totally agree.
Thanks. Yeah, thanks, Bill, for mentioning that. That was a topic a comment that we specifically made and did make it into the report, that there was concern, as it was worded, it was among some members of the task force that there was great concern with the CAFOs and related agricultural uses.
Well, we've got Christmas music in the background.
Not anymore, we don't.
I gotta love that. And I see a comment from Rebecca.
This is Rebecca. The comment about coastal A zone was before. My question. Yeah, my question on the California ag structure question is part of California's objective to produce a product for FEMA consideration? And does it also touch on how to build ag structures to both serve their intended purpose as well as minimize damage?
Seal, do you want to answer that one, or do you want me to try?
Yeah, I think we both might want to try it. My understanding was that report was going to FEMA and that some of the recommendations were requests to FEMA to, well, the second part of your question, Rebecca, on better methods and standards for the different egg structures. That was a piece of the guidance that they were looking for as one of the recommendations, but also all the insurance rating questions there were questions, recommendations to FEMA. And I think, Bruce, you know more about what's happening at the next stage with FEMA?
Yeah, so basically they are using this report, my understanding is, to inform FEMA on different ways they feel their ag structures could benefit by making changes, whether it's with ordinances, whether it's with insurance, and how to deal with that. Rebecca, I don't remember seeing anything specifically on building per se, if that was your question. But again, it's used to help. They're hoping that helps inform FEMA, who is going through a study right now and a follow-up to a GAO report in 2014. So this task force went ahead and started this on their own, independent of the GAO report. So I'm sure FEMA will be looking at this and reading what they have to say, but not necessarily, going to jump at everything that they've done, or they might. I don't know. They have to look at it. Other questions or points on ag before we move on?
I'll just mention that the report did have discussion about whether human intervention could be allowed and some different flood-proofing techniques that they were looking for more flexibility and guidance. They got into that level of detail.
Yeah, but like you said, Seal, they were very heavy. I'd read through the task force, very heavy around this Zone D. It's like they're I won't say it was very big to them.
All right, one more time. I screwed up again.
All right. Well, then, again, if you've got some suggestions or thoughts, we'll try to put a link out to that task force paper once it's released, if it's released to the public. Sure it is. It's a California DWR, I think, funded project. So you guys can take a look at it and weigh in as well, or give any additional thoughts. And I'm sure if you're wanting to share them with FEMA, let SEAL know, and we can let FEMA then know that you'd be interested in giving your thoughts too. Next, Chad, I'm wondering if you could give an update on the whirlwind of activity that's kind of happened just in the past couple months around reauthorization, and also if you want to add any more than what I did about the reinsurance pilot, as well as what just was released.
Sure thing, Bruce. Let's see. Good morning or afternoon, everyone. I think we may have still morning on the West Coast, but wanted to talk about an area that we're very heavily involved in as the national organization, and that is NFIP reauthorization reform. As probably most of you know, September 30, 2017, the NFIP is due to expire, and typically that piece of legislation, when you go through a normal process of reauthorization, a typical reauthorization period for the NFIP has been about 5 years. However, to get to that point is always very interesting. I think that with the last time the NFIP was reauthorized, which was the Bigger Waters Act of 2012, it had a series of short-term extensions, I believe maybe up to 14 of them, before we had an actual reauthorization, being the Bigger Waters Act. And so in terms of reading the tea leaves, what might happen this year, kind of the best consensus thought out there is that more and more people are beginning to think that we'll probably have some kind of short-term extension that has to do with the Senate having a huge workload with the incoming administration and all the confirmations that they have to do, and also the fact that the Senate hasn't actually done anything. The Senate really hasn't done anything related to NFIP reauthorization. That the House Authorizing Committee has, but not the Senate. So that's kind of the speculation at this point in terms of what might happen. But organizations like ours need to be paying attention to the landscape out there. What are the folks in the House and Senate saying? What's the administration doing? And then finally, what are other interest groups doing? So maybe along those three lines, I'll kind of talk to you a little bit about some of the things that we're involved in. From the administration standpoint, we are working with FEMA, in terms of, making sure that they're aware of our ideas. We want to try to be aware of their ideas. And one of the things that I'm very happy to report is it looks like FEMA will be engaged this year when it comes to working with the Hill. It's for whatever reasons in 2012 and 2014, FEMA was not as engaged, and I think it really hurt some of the debate and discussion because FEMA has a definite informed perspective, and whether or not folks agree with it, when you're kind of not at the table in those discussions, I think that can be that isn't so good. But FEMA's been actually actively engaging the Hill in terms of some of the needs and things, and I think that's overall a good thing. When it comes to the congressional committees, as I mentioned earlier, the Senate really isn't doing a whole lot because they're going to have a new chairman and things, and so it just isn't a priority there. And they also were thinking that prior to the election the Senate would flip, and so that even was more of a reason not to do much. In the House had initially proposed they wanted to get a bill out, a draft bill for discussion before the end of the year. What they ended up releasing is a set of House principles that track largely with a theme of privatization of the NFIP, more private sector involvement, and kind of ultimately weakening the NFIP to where it becomes some kind of residual risk program. And so that's really what the principles reflected. Now, I guess if there's a victory in the principles, there was a recognition that mitigation is important, and so there was a kind of vague pledge on helping out with ICC, and also maybe trying to support acquisition for low and very low income folks. So those are a couple of ideas that hopefully as we engage them, they picked up on a few of those, and we'll continue to work with them further. But where most of the activity is happening right now are with affiliated other organizations, and we're probably working with close to a dozen other organizations, whether they be independently with them or in coalitions or in subgroups or those kinds of things. So we're working with a range of groups from environmental organizations to one of the newcomers in this one, Pew Charitable Trust, which I think is going to have some pretty big horsepower behind it, to the National Association of Realtors, to the Smarter Safer Coalition. And in fact was on a phone call this morning with some Smarter Safer Coalition folks trying to debate and discuss one of the ASFPM ideas, which is an addition of what's called an equivalency fee equal to the federal policy fee on private flood insurance policies, at least those that meet mandatory purchase. So ASFPM's major reform ideas are found on two documents that we have on the website. The ASFPM Principles for Reform actually has kind of our 6 big bullet points. It's a one-pager that's a quick read. And then a slightly less quick read is our 2-page priorities that have a little bit more flesh on the bone. But we're essentially focusing on supporting flood mapping, supporting mitigation, supporting true parity between private sector and NFIP, addressing NFIP affordability, and strengthening compliance with mandatory purchase. So those are kind of the big areas that we're focusing on. And I think with that, Bruce, I'll just kind of end it there and be happy to engage in a little Q&A.
All right, I'll throw it out to the group. If you all have questions for Chad about where they are with the reauth. Chad, where do you think why they're unmuting themselves? Anybody? When is there a prediction of when we might see the House get their first bill out?
It's a little unclear at this point. Was in D.C. last week, and we were talking about this a little bit. But we have some new, even though the full committee is still going to be chaired by Henserling, I believe we have a new subcommittee chair. And so we have some leadership changes in the House as well. And even though the committee, some of the staffers say they want to work early on this, we're looking at the priorities of the incoming Trump administration. And again, the authorizing committee in the House is House Financial Services. They likely will have roles in things such as repealing or rolling back financial regulations, which is a top priority. They also may have some roles in terms of any kind of repeal of the Affordable Care Act or any of those pieces, and possibly even some incidental type things with tax reform. So kind of some of the really big Trump priorities. It's just going to be a busy season. So we don't see things. Would be surprised to see anything probably before March or April.
Okay. Thanks.
The affordability study.
Oh, I'm sorry.
Any update on the affordability? Any update on the affordability study?
We're going to try to meet with. We have a quarterly meeting with FEMA leadership, and I do want to check the status of that. The last I'd heard Roy talk about it, they're working on it. They realize the timing isn't great, but I think they'd kind of promised something late summer, early fall, and I haven't heard anything different at this point.
Hey, Chad, you mentioned, this is Mike Buckley, you mentioned a fee on private insurance. Can you explain a little bit more about that?
Yeah, sure. So one of the things as as we had the private flood insurance bill out there, the Ross-Murphy bill, that really tries to facilitate expansion of private market flood insurance policies. What Ross-Murphy did is it basically went after those policies that are triggered by the mandatory purchase requirement. And as we were analyzing the impacts of Ross-Murphy, one of the things that we really that we concluded is that especially if it takes any kind of substantial number of policies away from FEMA, it's going to impact not only the premium revenue, but also the fee revenue that comes in. So the federal policy fee is a fee around $50-ish, I think, for A and V zone policies, and less, I think, for BCX. And it essentially pays for two things: mapping and floodplain management. For mapping, depending on the year, it might pay for about a third to a half of the mapping budget. For floodplain management, it pays darn near the entire cost of doing that. So the concept that we came up with is that because private insurers use FEMA flood maps to some extent, because they at least benefit by the virtue of there being a mandatory purchase requirement, and that requirement being triggered by FEMA flood maps, then it's only fair that they share in some of the cost by assessing all policies this equivalency fee equal to the federal policy fee that would go then to FEMA to fund those very programs. So that's kind of the concept.
Thanks, Chad. Any update on the reinsurance, more than what I added that you're aware of, besides the pilot that's going on and the call for reinsurance?
No. Well, Roy had made a commitment, and I've seen him in a couple presentations. Reinsurance has been in the law for a couple years, I think, since Bigger Waters, and there is intent to move much more strongly into reinsurance. In one of my meetings last week, I did have an interesting conversation where evidently there was a reinsurer that had kind of come up with a price of reinsurance when you look at the NFIP portfolio, and the cost was very significant. So I think it will be interesting to pay attention to kind of how reinsurance works and what the cost is, to the policyholder. I'm not sure. I thought with this little pilot that was being done, FEMA was going to kind of absorb the cost into the fund, but I don't know if reinsurance now, as it becomes broader, is it going to look like another fee? Is it going to be reflected in the rate tables? Those are a couple of questions that I have.
Right. That'll be interesting. Yeah, when we asked at FITNIC, Paul Wong said that it was absorbed or paid out of their operating budget, the pilot, because it was so small. But the big question is, who's going to pay for it starting in January?
Yep. So that's all I know on that.
All right. I put a link up if you want more information about the reinsurance program. I just put a link up on that FEMA has describing their initiative, both the pilot as well as the call for quotes for reinsurance for the 2017 program. Let me move.
Hey, Bruce.
Go ahead.
Bruce, one other thing before moving on that I did mention. There seems to be a lot of focus this year, and I think this is kind of exciting, on mitigation. We have some pretty powerful players, from the House Financial Services that recommended that believed it had value, which I think is a win, to the National Association of Realtors, to a lot of the environmental groups, to even the Pew Charitable Trust. Everybody has kind of a mitigation plank in their reform concept. So I think that might be an exciting part, depending on which direction it goes, like ICC, addressing RL and SRL properties that are hitting these big premium increases and so forth. So lots of different ideas bouncing around out there. Thanks, Bruce.
Sure. And with mitigation, part of that driving as the premium continues to jump up. I think we're now going to be hitting in 2017 in January the renewals 4 years later of when they implemented the 25% rate increases on certain properties. And so those now have more than doubled in premium. And so you can just imagine if, it was $2,500, it's now like perhaps $5,000 to $6,000 renewing premium. And then in 4 years' times now it'll be $12,000, $13,000, $14,000. So that will help drive that mitigation discussion, as well as seeing what comes out of that affordability study that is due right about the time the reauthorization is expiring, or July, I think, maybe. Anyway, so maybe they can rush that and get that out a little earlier. Let's segue over into increased cost compliance. This has been one of the top items that the insurance committee has been focusing on. I've had a couple specific meetings around it, had calls with FEMA on that, and now they invited 3 or 4 members to D.C. for a half-day, full-day, half-day brainstorming and one of those people that were able to go was our very own Jennifer Bazzi, who has been fighting her own battles around ICC and trying to get even small changes made that would affect everybody in a positive way. So with that, Jennifer, would you mind giving us an update on how that meeting went, as well as where you are with some of your battles?
Sure, I'd be glad to. And Chad was there at the meetings as well, so if I've dropped something or he remembers some more details, I'd be glad for him to fill in there too. It was a really interesting meeting. The sprint, and I guess Roy Wright had kind of tasked the group with coming up with things that were innovative, and thinking, with that whole term outside the box. And I'll just touch on just 6 things that were, I think, the things that were most often discussed, and I'll end on the last one that was very new to me and that I think people here might find really interesting. One thing, of course, they talked about increasing revenue, and most of the conversation at that time was that I think the average ICC cost to a claimant at this time is $7 to $13, and the current statute allows it to be up to $75. So there was some discussion of moving it closer to $75 to get revenue in. And the revenue piece of it was because they wanted to try to raise how much might be available for ICC. As many of you, if you're involved in mitigation, are aware, ICC is generally not available at the same time as, say, disaster grants, HMGP. They follow a different timeline. One could be paid right after the event. The other one might be 2-3 years down the road. And I think there was some desire to have people be able to elevate on their own through ICC, and kind of a consensus that $30,000 was not enough to do that, and that should be increased. Well, if it's increased, where would we get some revenue? And one of those ideas was increasing the ICC premium everyone pays. I guess there was also a conversation that I don't recall, but has been brought to my attention, that they might want to raise what that cap is as well. So that would have to be done by statute. Right now they could administratively move it towards the $75, but they would be possibly open to actually making even that $75 cap higher. The next thing was something I think everyone on this call is familiar with, which would be raising the maximum amount of insurance that someone could have above the $250,000 limit. And that was just, there was some discussion about that, but I think they wanted to talk to the actuaries about that to see if that would really be, what the fiscal impact of that would be. I think all of these things, the actuaries are still running the numbers to see what might be actually fiscally possible.
So Jennifer, so for that one, sorry to interrupt, was that one basically that if you have a total loss of the 250, you could still get ICC on top of that? Was that the thinking of it?
Well, there were 2 separate topics. One was that 250 may not be big enough of a cap for the maximum policy amount. And then the second part of the discussion, exactly as you said, was in the current system, there's the 250 includes ICC, and I think there was a consensus that since the ICC is a rider that's paid for separately, that it should be on top of the 250.
Okay, thanks. Great.
That's what you were saying, right? Yeah.
Yeah.
So there were 2 different proposed. One, that 250 itself is not enough, and the second thing that whatever the maximum amount is, ICC should be on top of it since it's a separately paid rider.
Perfect. Thanks.
Okay. And then the thing that was newest to me, I'd never heard of. I don't know if everyone on the call is familiar with homeowners insurance and the law and ordinance potential. Are you familiar with that, Bruce?
Yeah, they call it increased cost in construction.
Mm-hmm. So, we all know in the flood world, once you're substantially damaged, then you're supposed to, the local government's supposed to require that you elevate, relocate, or demolish the structure within a certain period of time. And of course, ICC is your $30,000 to effectuate that. But the corollary in the homeowner's insurance is law and ordinance, which has a similar thing there. That I guess many policies have law and ordinance, which is, if you get damaged due to whatever that covered the insured loss is, if there's some code requirement, say 10 or 15% of your policy value could go towards coming up to code. So that's kind of a corollary with ICC, but in the homeowner's insurance world, it goes a bit beyond that. If, for example, your house burned down and you had fire coverage, and it was going to cost you $50,000 to get right back where you were, if since then the codes require energy efficiency and new things that are going to cost, say, $10,000, your law and ordinance, as I mentioned, is about 10%. So you'd have $5,000 of your law and ordinance to put towards going back together. But you could also reach back into the policy value to come into compliance with your codes. So just if you bear with me, this was my first time with this, but if you think about this in the flood insurance pattern, if you had a $100,000 policy and you've got your $30,000 of ICC, if you had a $20,000 claim and it was going to cost you $100,000 to elevate, you would not only be able to use the ICC, but to use the other policy value, the extra $70,000 that you hadn't made in that claim. So they were considering making not only the ICC, but the policy value itself, your claim value, available.
And how did the FEMA folks feel about that, knowing, of course, the actuaries would have to weigh in? Were they liking the idea, or like, okay, that's really nice, but no thanks?
I don't really have a lot of feedback on that. I did call up to see, but the actuary is actually in Hong Kong until next year. So, so I think FEMA is open to these, each of these items, but again, based on what the actuary says, and those numbers aren't in.
This is Chad. If I can add to that, my sense from the group on law and ordinance coverage is that everybody in the room thought that it was a very viable path to at least look into. Now, Tom Hayes was there on the actuary side, and the actuaries typically shake their head no at new ideas. I'm not trying to be mean or anything. It's just that they're very conservative thinking. But as I understand with the sprints, they are intended to really push solutions. And so while there may have been a little concern that way, I thought there was a significant consensus that might be an interesting direction and an innovative way to deal with the cap on the amount of ICC that's available and that widening gap between that cap and the cost of mitigation.
Because that cap is set by Congress, isn't it, Chad?
The only cap that's set by Congress is the $75, the amount that's charged. But the actual, whether it's $20,000 or $30,000, when FEMA made those changes from, I think initially it was 15 to 20 to 30, those were not statutory. Those were done by FEMA.
But the costing is $75. But if they instead use funding or use actuarial rating, if you will, and then they're getting away from that $75 fee. That's maybe one way around it.
Possibly, yeah. There was a whole other discussion on how that fee is actually set, and that was very interesting.
So what came out as the next steps, Jennifer? Did they come up with a plan? Okay, here's what we're going to do in the next month, 2 months, half year?
I don't remember a particular timeline. Like I said, I just had called in to get an update, and I think some of these ideas have actually been proposed to Roy Wright and his team, and I don't think any were rejected outright. I just think they were wanting to have the input from the actuary before figuring out which ones to really delve into, to see which ones are feasible financially.
Hey, Bruce. Yeah. Oh, Bruce, maybe to add to that just briefly, and also cover one other area that I thought was really interesting. One of the other areas that we did get into discussion about that, honestly, because we've been trying to talk about this for going on 10 years since the '04 Act, was what FEMA now informally calls it dry ICC, which is the offer of ICC when you don't have a triggering event. The bottom line is that we were able as a group to come out with a path forward on how to implement that. There was, I think, a comfort with let's do it with SR and SRL properties first, and then maybe it can grow from there. But going into this meeting, my hopes were not very high because the door always seemed to be shut on trying to open up that trigger, which has been in the law since '04. So I'm mildly encouraged there. But in terms of next steps, I know we got an email back from the Sprint team leaders, and it basically says that the redesign effort's just beginning. The ideas will go through refining steps. They're going to crunch numbers with actuaries and financial managers. Recommendations will be made to FEMA leaders on which elements FEMA can tackle right away versus changes via regulations or changes in law. And the team will propose alternatives for FEMA's leadership decision-making process. There's a commitment that Claudia Murphy, who was one of the attendees there, will engage the team that attended to continue to hone the options. So those are kind of the next steps that they outlined.
Mm-hmm. Thank you, Ted. And I had forgot the dry ICC.
That's good to hear about the dry ICC. But no dates or like more harder concrete things were given?
No, well, as I mentioned, they said they'd already taken it to Roy's group, so they've already moved it forward a bit.
Yeah, I think what they moved forward though was just the concept to do this whole sprint process was my sense. I'm not sure because they really, I mean, for those of you on the phone that know Paul Osmond, and Paul's a great state floodplain manager, healthy dose of skepticism. But when Paul, who attended this, basically said this is one of the best meetings I've ever attended, and I felt like something might get done, that was I think a good endorsement of the process.
Yeah, agreed. So let me open it up while I have you both on the phone, off mute, and see if anybody has any questions concerning where ICC is going, any questions about the sprint, or any communications Chad has had with FEMA or FIMA. No.
This is Rebecca.
Go ahead, Rebecca.
Yes, Chad, is dry ICC the new name for door number 4? And have y'all gotten more recent data on the actual dollars that are being allocated, and does it still show an awfully lot of ICC approved payments are less than $30,000?
So it is it is for door number 4, and I believe door number 2. One of the things FEMA can trigger ICC on repetitive losses, but in practice, it is repetitive losses associated with substantial damage. And so they're only implementing basically the SD-based ICC. So it's to do both of those. We got into a really detailed discussion on, the concept. We even explored the concept of ICC mitigation grants. And it was pretty neat. Some of FEMA's grants folks were there as well for HMA, and as well as their attorneys. And they basically said, well, if it kind of looks and smells like a grant, then if you trigger our grant requirements, you're not going to like the result. It's going to slow things down, full EHP review, all those other kinds of things. So I think the kind of the approach that we walked away with is door number 4, but it's kind of a more limited focus on RL and SRL type properties at first.
They already did a pilot on SRL a couple of years ago, and I don't recall if they ever reported out any results other than they suspended it.
We I think one of the documents before the meeting that we got was related to that, and yeah, it was very complicated and not terribly successful. And I think all I've seen is a memo with kind of an outcome, but we had talked about that a little bit as well.
And this is Bruce. Just to clarify, the dry, I keep thinking of dry ice. The dry ICC, or door number 4, for those who aren't aware, is basically where they receive a mitigation offer that's unrelated to having had an immediate flood, like through repetitive loss or substantial damage. And so you don't necessarily have to have had a flood event. Did I state that correctly, Chad?
Correct. It's basically triggering upon an offer of mitigation.
Right.
Well, there's another door that basically gives them authority to trigger ICC even outside of a grant. It's the one that they have been the least interested in doing.
Oh, the administrator's discretion.
Yes.
Basically.
Right.
Maybe I got the door number wrong.
No, that's another one for sure. But I don't know if that's where, the administrator can just say, hey, I think this specific case, this house here, this makes sense. Let's do it.
Well, what was actually, so where that became very important in the discussion, though, is that I think allows FEMA to implement the ICC on an offer of mitigation, like dry ICC, as well as these other directions, without maybe having to do rulemaking. And I think that's maybe where it became very important, because the sprint seemed to be also geared towards what can we do, how can we do as much as possible without having to go through rulemaking or statutory changes. And so that one actually became important to give cover to the other stuff they were doing.
That's good to hear. Other questions for Chad or Jennifer? All right. Well, thanks, guys. And Chad, I guess you'll be having another quarterly call with FEMA, and I'm sure getting updates on where they are with this.
Oh, absolutely. We've been working on this for a long time. So, yeah. But Bruce, I'm going to drop off now. I have another meeting that I've got to run to. So.
Well, thank you for being on, and Jennifer, thank you as well. And as mentioned, if you've got questions, you can put them in the chat, and we'll see if we can answer them that way as well. Let me move on to this will be a quick section, updates for October 2016 and October 2017. For those in California, Louisiana, and a few other places, so there's only about 15,000 of them, AR and A99 policies, they changed the ruling. They went back and reinterpreted that the law saying that they should be getting the same rates as Zone X, and decided that those AR and A99 properties can be eligible for the PRPs. And also, if they are mapped into a different special flood hazard area than AR 99, they could then be eligible for using the newly mapped procedure. So that was one of the two kind of main changes that occurred. And the other is as they began re-underwriting half the book of business, with the other half being underwritten starting next year, they are now allowing refunds to go back 5 years. So no real rate changes besides AR 899 becoming eligible for PRPs. Kind of light on the changes. And going in with that same thought, April 2017 is going to be really light. The average rate increase is only going to be about just over 6%. And in fact, we have some that are not going to see any increases, like AOH zones. And post-firm A-numbered AE are only going up 1%. Post-firm's going up around 7%. Post-firm V-zone is post-firm A, a number at 5%. And statutorily, the pre-firm has to go up at least 5%. So the pre-firm primary residents, for example, are going up 5%. And of course, the ones that are required to do the 25% will continue as that. And that's all the changes in 2017. So FEMA has conscientiously said, well, let's put the brakes on these large increases. We're losing policies, and let's see if we can slow it down a little bit. So not the major increases that we've seen some cases in the past. Any comments or questions on that? Well, in the remaining minutes, I want to throw it out there to see if anybody either can put in the chat or take yourself off of mute. Are there any points that you would like to raise that you'd like the insurance committee to be considering in the future, or any comments on points we've raised today? So take yourself off mute and or in the chat.
Yeah, Scott in Key West.
Go ahead, Scott.
Yeah, how about the number of issues we're having with the new flood-proofing certificate? Are those being addressed?
No. We've not heard those. What are some of the ones that you're noting?
Well, they eliminated the phased blocks, so there's no longer construction drawings under construction or final construction phase on the flood-proofing certificate. So we're having difficulty, we're going to have to go by the date and hope we understand which came first and which is the final, because there's no indicator and there's no comment box for the engineers to state what it was they reviewed, or whether it's construction drawings or finished construction. And then, let's see, also in the wording about what the engineer is saying that he's certifying, the wording is so vague that it indicates that the engineers are looking at as-built drawings, and of course they don't have that if it's not a finished construction one, so they're hesitant to sign these things.
Interesting. Are there, well, let me ask you this. If you can, I'll put my email address in the block chat. If you can email to me what you just said and maybe articulate a little more in writing, because I'll pass those on to FEMA. But since you brought that up, are there other people, anybody else on the phone having similar issues or questions around the flood proofing? Because we didn't really hear it. We heard a whole lot about ECs because probably they're used so much by everybody. But
also, they added Section 2 to the new certificate that talks about a land surveyor's certification. There's no way to indicate on the flood-proofing certificate that an elevation certificate accompanies the document. So it would appear the flood-proofing certificate is incomplete unless a surveyor completes it as well as the engineer.
Interesting.
Bruce, this is Bill Neckerman. One of the items on the floodplain regulatory committee agenda is apparently on the same issue. There's a requirement for annual recertification, and this is something that Lisa Jones had raised when she was co-chair. And I think it's something that our two committees need to talk about so that we know that we're on the same page, or at least understand the issue.
Okay.
But not only does it require annual recertification, but it also talks about annual inspections by the local governing authority, which is me. Well, I don't have the time, the people know the budget to do that sort of thing, and I don't enforce the flood insurance manual.
This is Rebecca. The kind of vagueness between as-built versus design has been in the certificate for a long time. But I think the changes that you're seeing that attempt to more clearly distinguish between a design cert, which is required by 60.3, and the kind of as-built, flows from a lot of failures or a lot of claims that followed Hurricane Sandy. And it's my understanding they were doing some exploration to try to determine were those failures related to, the Mother Nature didn't read the map and the water rose higher? Was it a design failure? Was it a human intervention failure? And to my knowledge, there is no report on that yet. But it's my understanding that's what drove some of the changes, including you've got to submit things, and FEMA is reviewing every one of them, and all sorts of complications.
Yeah, when FEMA went in and started noticing the losses that were, I think it was from Sandy, and then they actually went back and looked and did their own mini internal study, found a lot of the floodproofing, the policies covered by, or were getting the floodproofing benefit, were not really adequately, didn't have the plans. They had 80-year-old women lifting steel plates to put in place, et cetera. So that caused this whole re-underwriting aspect. But if you can send me and anybody else any other thoughts and ideas on the floodproofing certificate, that has not been on our radar, but it doesn't mean it can't be, and we'd love to hear from you.
For those of us who couldn't use Skype, what's that email address?
Oh, I'm sorry. B.A. Bender, all one word, B as in Bruce, A. Bender, at cox.net.
Okay.
Thanks. Bill brought up on the chat a point of discussion of elevation-based rates for modeled-based Zone A's. Bill, it's interesting timing, but I thought I would let you share what you're thinking, and I'll share with you something I just have to submit to FEMA. Go ahead.
Okay. Hey, well, part of it, step one, is just clarification of what FEMA's policy is. And when I'm talking about model-based Zone A's, in a lot of the new digital maps, a Zone A, when you look at the map, it's just a Zone A. It's an what we tend to think of as an approximate flood zone. But in the newer maps, there is modeling behind it, particularly if you have good topography. So if you look at the DFIRM data, pull up the covers and you dig into the DFIRM data, there are cross-sections there with elevations very precise. They may not be very accurate, but they're certainly very precise to a hundredth of a foot. And we've been sharing that with local officials for construction purposes because it's better data. But I would like to be clear on where we stand with using that data for insurance ratings, for LOMA determinations, and whether that's widely understood and whether we need to recommend some changes.
The timing of your question is interesting from the aspect I just recently submitted to FEMA and also found out that June is back home in the Philippines visiting, so I don't know when I will hear, but it did get passed on to another person in underwriting, that very question. I came across two different situations where they have essentially a detailed study, but because they're not putting in floodway, they're putting them in as a approximate Zone A, but they've got all that information there. So why would it be rated, if you're going to get a BFE from that data, which is much more accurate than the old approximate A, why can't you use then an AE zone rate instead of an approximate zone 8 rate and get the benefit of that? Because in some cases it's definitely cheaper. That I just submitted 2-3 weeks ago. So if there's other people interested as well, we could also bring this up as an ASFPM request. Seal, I don't know if you're on the call anymore, but maybe we could reach out to other committees to see. Go ahead.
Yeah, I am still on the phone, and I know that we've been using the model-backed A-zone information for insurance policy purposes and for LOMAs, as long as it's gone through the full process and it's not still in it has gone through the full review and is being used for the updated maps.
Yeah, unfortunately, the agents don't know that they can do that because I don't think it says they can in the, they'll see approximate zone A, and so they'll use the approximate zone A rating tables, and whatever BFE they get from that, they'll still use the approximate zone A rate.
So definitely something to follow up on.
Well, there is a table in the manual that allows for community provided elevations for rating purposes. So it would seem to me that whatever FEMA has come up with could be used with that table, at least in the short term, and maybe in the longer term we just go ahead and publish the BFEs and go from there.
But it's that, I think that was that you, Mike Buckley?
Yes, it was.
Yeah. Are you referring to using the estimated BFEs for approximate zone A?
Yeah.
Yeah. So the question and people use that now, but the point being is, it's more than just an estimated because now there's detail behind it. Why can't they just go ahead and use the zone AE rating instead of the estimated BFE for approximate zone A? And get
I would agree, but currently they can use that table.
Correct.
In the longer term, let's go ahead and use those elevations.
Yeah. So maybe Bill, we'll talk offline as committees. If other people have examples or want to throw their 2 cents in on that, please do. Again, you've got my email address, and reach out to us, and you'll see our comments also in emails in the newsletters.
This is
any
Rebecca.
other point? Go ahead, Rebecca.
Yeah, I'm kind of mystified about this topic you just talked about, but it goes beyond insurance. Remember, there's an ancient FEMA publication that pretty much allows you to default to elevating a building just 2 feet above highest adjacent grade if you can't find a BFE from sort of other sources. So, if what you're talking about gives better depth or BFE information, whatever, it's a regulatory issue as well.
Agreed. And the people I've talked with are using it for that reason. Go ahead, somebody else.
Yeah, Bruce, this is Becca, and I don't want to get too far into the weeds here, but the model-backed zone A is not public. They don't publish the BFEs because there's a lot less detail and there's a lot less input that goes into that. So they're model based, but they don't consider things like backwater or other structures. So they're really good estimates, but they're not studied to the same level of detail they would if they were going to publish the base flood elevation, and that's why there's probably hesitance to use those for insurance rates, but they can be used to regulate because it's considered best available data.
Interesting point. Thank you. Well, I want to be respectful of everybody's time. We've got a couple minutes left. Let me just throw it out there real quickly to see if there's any other points we'd like the committee to work on and look forward to in 2017. Going once, going twice. Well, with that said, again, Becca, thank you so much. This worked great. I hope we'll get more people on Skype, PowerPoint next time, or on the system. But it sounded like it worked well, also with the phones and the muting of it, compared to the last couple times hearing company music. So thank you so much for that. Everybody else, have a very relaxing, safe, joyful holiday, and we will see you in the new year. Talk with y'all. Thanks again.
Thank you, everyone.